impact on the economy and the industry as a whole. Joining us now to discuss all of that and is the president of CII, Naushad Forbes, and chief economist at Axis Bank, Saugata Bhattacharya. Gentlemen, thanks very much for joining us here on India Business Hour. Naushad, let me start with you first. The government has gone ahead and accepted pretty much all the recommendations of the 7th Pay Commission, barring the allowances, as Sapna was pointing out. What do you think will be the immediate ramifications for the wider economy as a whole? Does that concern you in terms of a possible impact on the fiscal deficit?
So, it will show up in two ways. It will show up in a very direct way in our GDP growth rate because of the way in which GDP is calculated. The government output and its contribution to GDP is calculated on the basis of how much you spend on it. So if you spend more on it, it shows growth. So that will add positively to our GDP growth rate as the money starts flowing to all the employees. That's not necessarily a good thing. That's an accounting thing. The second thing that I think is much more fundamental and important is how is this pay increase going to actually be financed? In a private company, if you have a pay increase, you must also have a productivity increase. Because if you have pay increases without productivity increases, then at some point in time, the company's operations become unsustainable and the company will disappear. In the government, if you have pay increases without productivity increases, that feeds through into the economy in the form of printing money and therefore inflation. And that again becomes problematic for the economy and unsustainable in the long run. So the key things that we should be focusing on now is how, as a result of the pay increase, the government should be looking for productivity increases from all public service employees to actually justify and pay for that pay increase.
Okay, fair enough. But let me come to you, Saugata. Could you put the numbers into perspective for us? For instance, which are the sectors that will stand to gain immediately and which will gain in the long term?
If you take the allowances part, the total central government budget plus the railways should be about, I would think about 0.07% of GDP. So this definitely has an impact on consumption. Remember, though, that this is not new money being created. I mean, this is essentially a shift probably from capital expenditures or from a wider array of consumers into the hands of a select category of potential consumers. So here the marginal propensity of consumption would come into play, and as you yourself put it very nicely, that I mean a whole bunch of consumables, discretionary incomes increases, and together with that consumer durables, household appliances, electronic goods, automobiles, these are presumably the sectors that immediately might see an increase in demand. Real estate also, probably to a certain extent. This is not going to be as dramatic as we had seen in 2008-9, because over there first the scale of salary, wages, salary, pension increases is more limited this time than what we had seen in 2008-9, and as well as the arrears component. I mean, the number that we heard about 20,000 odd is minuscule compared to the arrears that were given spread across 2 years in 2008-9 and 9-10. So the impact is likely to be limited. The inflationary role is not likely to be very high, significantly high. So on the whole, I think this is a net benefit in terms of using some of the excess capacities that we have in the system, given a boost. Together, if the rains are good, the two together should actually start a little bit of increase in demand in the system.
Okay, gentlemen, I'll request you to hang in there. Let's also hear out what the CEO of the country's largest home loan provider, KK Mistry, had to say about the impact of the 7th Pay Commission in a conversation with CNBC TV 18 earlier.
Per se, the pay commission is obviously going to result in more money in the hands of people. And we have seen historically that whenever people have more money, consumption increases, whether it is consumption in the form of buying white goods, whether it's in the form of buying houses, consumption, or buying cars or buying two-wheelers, consumption always increases.
Well, consumption is bound to increase. That's the word coming in from KK Mistry in terms of what the impact of the 7th Pay Commission recommendations will be. Now, also the Finance Minister today cited the IIM Ahmedabad study, which actually seems to suggest that government employees are actually paid on par with the private sector. In fact, he actually went on to say that in some instances, salary structure of the government is now even better than the private sector. I don't know if you would agree with that or not, but Naushad Forbes, what's your own sense on consumption as well as Finance Minister's rather interesting observation?
Well, you know, in terms of how private sector and public sector pay compares, actually public sector pay is probably now higher at lower levels. It's still lower at higher levels. And probably both the public and private sectors would be better off if we met somewhere in the middle, in that if the public sector paid lower levels less and paid higher levels more, it would probably be good. And if the private sector paid lower levels more and the top levels less, it would probably be good. I don't see that convergence happening anytime soon, but I'm always an optimist.
All right, you're an optimist for sure. But let me get back to Saugata. Saugata, just a quick point on the bank deposits and the accretion that it can bring in the next immediate term. In fact, bank deposits at this point in time are at a multi-decade low. So you have some outflow, if I'm correct, coming up in the month of September. Can this cushion all of that a little bit in your assessment?
It can. It can. What happened, again, I mean, going back to the sixth pay commission, there was a very significant increase in savings bank deposits at that point in time. This time, of course, I mean, at that point in time, equity markets had were just recovering from the collapse of the year back. So, I mean, there might have been some discomfort in moving things to mutual funds. So I'm not very sure how behaviorally investment savings behavior will happen this time, but definitely banks will benefit, and particularly in terms of low-cost deposits. Maybe not as much as happened last time, but we are certainly bound to see an increase. And if we are correct that, I mean, there will be more investment in housing, for instance, with bank loans. The investors typically tend to keep some part of the EMI in bank accounts, particularly SB accounts. So we should see some increase in the savings banks deposits, yes.
All right, Naushad Forbes and Saugata Bhattacharya, appreciate you joining in on the show with that detailed analysis.